Hello traders, Gary Wagner here. It is 11:35 in Honolulu, 5:35 in New York on Thursday, 27th day of April, 2023, and this is the Daily Report for gold and silver. A very quiet day for gold traders, with June gold currently fixed at $1,997 per ounce. Although it had quite a range, trading to a high of $2,013.30 and a low of $1,982, it closed only $1 above its opening price, as well as a dollar change compared to yesterday's close. The dollar is in essence unchanged, up 0.02%, with the index fixed at 101.23. Lastly, silver is up about 0.4% or 0.36%, with the most active May contract up 9 cents and currently fixed at $24.96.5. This daily chart of gold futures clearly illustrates the conundrum that gold traders have been faced with, at least trend traders, that is, ever since gold traded to the record high of the year on the 14th day of April at just over $2,060. We saw an immediate decline, and then we saw gold trade within a $50 price range, which is very good for day traders, however, a nightmare for trend traders. It has been defined by a low at approximately $1,780 and a high of approximately $2,030. It is this last 9 trading days that I want to focus on. And to do that, I have gone ahead and enlarged the chart that we're looking at. We are focusing on this small area out of the last 9 trading days, can be easily identified as red candles, a day in which the closing price falls below its opening price. One candle, and that is today, is red by a tick, but I'm going to label this as the doji, where the open and closing price are pretty much identical, and 4 days that are green candles. In other words, we have seen gold prices oscillate between a high of $2,030, a low of $1,980, but have a medium price of roughly $2,000. Today, falling below that, with the closing price in New York currently at $1,999, and in Globex trading, currently we have gold trading at $1,997. Whether we view our chart through the eyes of a candlestick or a bar chart, which is what I just have put up, or a Henkin Ashi, we can easily see the consolidation within gold over the last few trading days. However, it really stands out when we convert our chart to what is called a Japanese Renko chart, because when we do that, the element of time is compressed, and we can clearly see that we have had a series of higher highs over the last couple of months, as well as higher lows, which has changed on this most recent low. Because when we compare this low here to the former low, we can see the first occasion in quite some time in which gold has actually traded to a lower low than the previous low rather than a higher low, as we have witnessed really since gold hit a triple bottom last year from September, October, and November at just above 1,600. It is just after 12 o'clock noon in Honolulu, 6 o'clock in New York. It is morning in Australia. We can see the gold pricing has resumed after closing in Globex below $2,000 and remaining below that. Although we have seen gold oscillate above and below $2,000 per ounce, and the fact that we have a defined $50 range with resistance just at around $2,030 per ounce and support just above $1,980, it is clear that we might not see any major movement and a break above the highs or below the lows until the end of the FOMC meeting, which will be Wednesday of next week, or we get more news on the banking crisis to see if that has simmered to a stop or heated up, we can expect that we could see this week close out quietly, either above or below $2,000 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.